Let's see the way of the traders. Almost everyone goes through these stations. Videos usually consist of two parts. First, we outline the potential issues, and then we discussed in detail how we can help them. So he started to trade, probably in an intuitive way. That is, if the price goes up, you goes long; if it goes up, it will become short. Murphy's Law. The other lane always moves faster on the freeway, even if you change lanes. That is, don't turn the trade. The opening of the trade, which starts with, "I think," "I'm going to the market," "I heard it on Bloomberg," "I read it on the net," etc. Forget it. A trader needs a system that is repeatable and generates profits over and over again. Mistakes can be written at the expense of inexperience, but experience is a set of mistakes made. Let's talk about the strategy or trading plan. When and why do I decide on the direction? When and why do I open a trade? How much lot do I open? Where do I put my stop? Under what circumstances I close the trade? Fixed take profit level or other circumstances? I apply this so-called break-even technique. If someone trades without a strategy, he's just a gambler. There is no room for subjectivity in a strategy. We're all different. Why would our strategy be the same? Since we know that neither the Philosopher's Stone nor the Holy Grail is available, everyone has been forced to find their own way. I told my young student Gabor a lot of strategies and attitudes. With TrendSurfer, he made a 14% profit in 1 week. He tried to be not smarter, he's disciplined, he knows what to do, he's going to be a great Forex trader. The stop is for little girls or women only. Almost all of us have experienced the next situation. We'll open a trade when we beat the previous high. The stop is below the last low stake in a spread. There's a vile candle coming in and he's going to hitchhike the trade. Okay, that's it. Vestides are part of the trade. But then the price goes in the right direction and would have made the profit target. If this happens a few times, comes the moment when the trader decides beyond this it will not make a stop. And from now on, it's only a matter of time before you reset your account. It's not uncommon to call me people on the phone what I think of the GBP when it will be over 1.43 again, because he's sitting in a long time for months, currently at a loss of about $7,000. That's exactly what it's about. It's only a matter of time before disaster comes. If someone wants to hide the stop pot and TP from their broker, they can download the dedicated expert advisor under the downloads section of our website. Should we touch a running trade or not? The general answer would be no, although situations are rare to clearly show your trade will be a loser. You're afraid of loss, which is why when you're running in the right direction, you take your profits out before TP. It feels good at the moment, but at the end of the month, you're going to miss the amount of money the market left behind. The stop location was obviously justified when we started the trade. You can't touch that. If someone is distrustful of their broker, use Stealth, NEE, which you will find under downloads. That distinguished term actually means how to handle your money. Besides, you have to forget about it in a pip or point, because these are just the units of measure of the exchange rate. Monetary value is determined by us. 10 pips, or if you prefer, 100 points can mean 10 cents, but $10,000. Risk management is the most important part of money management. We're talking about the case where I hitchhike and my trade gets loss-making. Conservatively, I risk 1% of my free capital for a trade. The opening size, lot quantity of the trade is therefore a function of capital, risk appetite and stop distance. The stop level must always come from the chart, never on the basis of mathematical considerations. Let's have $5,000 in capital in our example, so I'm risking 1%, so I'm risking $50. Sure, you want to stop at 25 pip or 250 points. At a distance of 250 points, you will need to divide the riskable amount with the stop distance, point. 5250 equals 0.2, so I'm going to have to open our trade with 0.2 lot. The percentage winning series curbs the loss, and in a winning series, the interest rate principal increases profits exponentially. Of course, you don't always have to count this. On our site, the downloads have a great position sizing indicator that will do this job. Then a script called PSC Trader binds your trade into account all parameters. Money management is an important part of trading. It has a pretty extensive business. You'll find videos about this on my video channel. If someone always loses 10% of their capital, $100 in a series of losses made, for demonstration purposes only, let's see how drastically the performance that would only take you back to zero is increasing. In a losing streak, one loses $100, 1% fixed, and the other loses 1% of the current capital. The first resets the account while the second still has 37% of his capital. Visibly reversing increases profit while it slowed down the pit. These are the same trades. And here's the power of interest-bearing interest, or exponential money management with percent thinking. Whoever's forging it will eventually meet to the robot trading. In particular, beginners try to bring back their losses in this way, with 99% more likely to increase losses. First and foremost, the robot is not a trader. He doesn't see the chart, he doesn't analyze the market. Even if there is a clear signal to us, an expert only recognizes the situation that has been taught, that is, what has been programmed. And it could be a lot of ways. Catch a turn, get into a running trend, or, on the contrary, look for where there's going to be a correction in the trend and try to get it down. Therefore, it is not recommended to run a robot as a beginner. If you have no idea what's going on, it just makes you unsure. I've never seen a robot that would have been profitable in the long run. Sooner or later, the market will go out from each, and when this will never be established in time. Never risk more than the current capital of 1% max. 5%. If you shut down the robot after a loss-making series, you may be missing out on the stage that would compensate for the loss and turn towards profitability again. So I suggest we start to doubt if EA's drawdown is massively different from the average in backtests. In this case, you should try to re-optimize the parameters as a first step, and if this does not lead to success, you only need to shut down the robot. One more thing. I haven't seen a robot in 31 years that would have produced the results he produced in the backtests. Of course, including self-developed experts. The backtest is more of the guiding information, whether the robot will be profitable or not, about the scale of the yield expected. The more indicators, the more certain the decision. Of course, the title is ironic. We can't see the wood from the forest. Have you ever heard the term paralysis by analysis? The same applies to trading, and if you are a trader who needs 15 different indicators to confirm your trading decision, then review your position. I am also a believer in the clear picture, only the most necessary. Indicators are generally not considered good for entry or exit unless programmed directly for them. Many times they give a wrong signal. A pretty nice loss can be put together. If you are already using them, set them not to close, but to median price. I myself consider the chart to be the best indicator. Naked Forex trading. Sometimes you see it enthused. How serious, multi-screen trading station people work on. Do you really need it? Of course it's a good thing to want to open a trade with, say, one of the JPY pairs, see what the other JPY crosses do. But poor man cooks with water, you can see it within one MetaTrader. I've never had a trading station in my life, up to 2 screens I've worked with. But it's been a good 10 years, and I'm doing pretty good with just one. That's one way to generate profits, and I'm willing to risk doing even better. It's a bit like a one chart with 1,000 indicator situations. It's not the amount of information that decides what you do with it. I'm not talking about anyone who can invest, but I'm going to put that in writing, but I'm not going to get any better. First of all, you do not have to work every day. My mentor always said, don't go to the market, let the market come to you. Whoever trades under compulsion has the chance to win it without having to. Start the day with the economic calendar. Couples who have a red message that day should be avoided. Even if you are not cheering every day, keep your hands on the pulse of the market. Usually it is quite clear that e.g. today is a dollar sale day. After looking through 8-10 charts it gives up. Situations that may be worth a closer look may appear during the review. If this is the case, get it out of your strategic box that fits best here and come on, coaching can begin. Okay, the second part is over. See you by the third part of the series. Thanks for your attention. Good luck.